Hello and welcome to Bottom Line. I'm Prabhu Chawla. For the first time ever, Modi asked every Indian to sacrifice. Here is why we are going to discuss in the Bottom Line. In 12 years as Prime Minister, Narendra Modi has never done this. He has launched surgical strikes, he had demonetized the currency, he had locked down a nation of 1.4 million people overnight. But in all those years, he has never walked up to the Indian public and said, change the way you live your daily life. Do not buy gold. Do not travel abroad. Save your petrol. Work from home until May 10th, 2026. And when a Prime Minister who has spent a decade projecting the image of resurgent, unstoppable India makes that kind of appeal, the markets do not wait for explanation. They react. And on the morning of 11th May, they reacted with a verdict that wiped out 5 to 6 lakh crore rupees of investor wealth in a single session. Today on the Bottom Line, we are going to answer the question that every Indian, every investor, every householder, every citizen is asking this morning. Why has the Prime Minister spoken like this? And what does it mean? On 10th May 2026, at public function in Hyderabad, Prime Minister Modi made 7 specific appeals to the Indian public. Reduce petrol and diesel consumption, use public transport, prioritize work from home wherever possible, avoid buying gold for 1 year, use fewer foreign brands and embrace Swadeshi. Cut cooking oil consumption, avoid foreign travel for 1 year, reduce dependence on chemical fertilizer in favor of natural farming. The Prime Minister linked each of these directly to India's foreign exchange reserve and to the economic strain created by the ongoing conflict in West Asia. He called upon every Indian to become a quote I'm calling guardian of the rupee. Now embedded within each of these 7 appeals is an implicit confession. A confession about how deeply India's economy remains structurally dependent on outside world. In gold, in energy, in the lifestyle of choices of its growing middle class, let us examine each confession with the numbers that the Prime Minister did not spell out. Let us go to chapter 1, which is gold. Because no number in the story is more startling. India is the world's second largest consumer of gold. And here is the structured truth at the heart of the Prime Minister's appeal. India mines just 1.6 metric tons of gold domestically every year, against a consumption of 800 metric tons. That means 99.8% of every gold bangle, every gold chain, every gold bar that sits in Indian household was imported. In 2024-25, India imported 803 metric tons of gold at a cost of 58 billion US dollar, roughly 4,80,000 crore rupees. And the current financial year, 25-26, the figure has surged by 25% to $70.98 billion, approximately 6 lakhs crore rupees. The demand has not fallen at all. It has accelerated. Consider what this means in pure economic terms. Every rupee spent on imported gold is a rupee leaving the Indian economy permanently, entering the walls of Switzerland, the UAE, or wherever the supply chain terminates. Gold produces no employment in India. It creates no industrial output. It simply sits in the households. And yet, woven into the fabric of weddings, religious rituals, and savings culture, it has become the single largest non-oil drain on Indian foreign exchange. The Prime Minister is not wrong to raise the alarm. The harder question, however, and we will return to it, is whether that alarm should have been raised 10 years ago through policy, not through a public appeal at a public platform. Now we come to the heaviest chapter, the second chapter. That one that connects every Indian kitchen and every fuel pump to conflict playing out thousands of kilometers away. India imports between 85 to 88% of its crude oil requirement, making it the world's largest crude importer after the United States and China. In 2024-25, India's petroleum import bill stood at approximately $101 to $104 billion, 8 to 9 lakh crore rupees. That's the single largest component of India's trade deficit. And as of this morning when we are talking, crude oil prices have crossed $104 a barrel, driven by the escalating conflict between the United States and Iran, and the consequent instability along the Strait of Hormuz. through which over 80% of India's oil imports pass. The LPG story equally alarming. India has consumed 31 million tons of cooking gas in 2024-25. Domestic production was only 12.8 million tons. More than two-thirds of India's cooking gas is imported. When the Middle East burns, Indian kitchens feel the heat, literally. Oil marketing companies are currently absorbing losses up to 30,000 crore rupees. Losses that will eventually translate into either fuel price hikes or government subsidies. Economists have documented that every 10% rise in crude prices shaves 20 to 25 basis points of India's GDP growth, which is the highest at the moment in the world. That arithmetic is playing out in real time today. The third chapter of this episode touches the emerging Indian middle class most directly and provokes the most emotional reaction. In 2024, 38.9 million Indians travel abroad, the highest figure in the nation's history. The Reserve Bank of India estimates that Indian outbound travelers spent approximately $17 billion in foreign exchange in 23-24. Broader estimates incorporating the all indirect expenditure place the figure as high as $33 billion. Dubai shopping festivals, Maldives honeymoon, European wedding rung into 10 crore rupees, tens and tens of crore. Bangkok holidays, these are no longer luxuries restricted to super rich. They have become aspirational milestone of India's upper middle class, even middle class. The Prime Minister's appeal to avoid foreign weddings and foreign holidays is arithmetically justified. But I will pose a harder question a little later, one that the appeal itself cannot answer. I just want to say, you're watching the bottom line. If this analysis is useful, share it, subscribe, and write your views in the comments. Good or bad, sweet or sour, I read every word. Now let us turn to the reaction. Because what happened in the markets and the political arena on May 11th is a story in itself. What is the chapter 4? The market verdict. The Prime Minister spoke on Sunday evening. By Monday morning, the markets had delivered their own verdict, and it was brutal. BSE Sensex crashed 1,200 points in intraday trade on Monday afternoon, settling at approximately 76,166, a fall of over 1.5%. The Nifty 50 plunged over 300 points to 23,862. Total investment wealth eroded by an estimated 5 to 6 lakh crore rupees in a single session. The damage was not uniform. The sectors that bore the sharper punishment were precisely those that the Prime Minister's speech had targeted most directly. Jewelry stocks, the companies that profit from India's gold obsession, were decimated. Titan Companies, India's largest jewelry retailer, fell over 6%. Kalyan Jewelers dropped more than 8%. Senco Gold and Sky Gold crashed up to 12% intraday. Aviation stocks weakened on the foreign travel appeal. Consumer goods companies with higher import content are selling pressure across the board. Now, the opposition did not wait for the dust to settle. Congress leader Rahul Gandhi was direct and pointed. He argued that the Prime Minister, having failed to build an economy capable of generating its own gold, its own energy, and its own aspirational infrastructure, was now asking ordinary citizens to pay the price of a decade of structural neglect. His central charge was this. For 10 consecutive years, the government told India it was the fastest growing economy in the world. It told us we were on the track to become the third largest economy by 2027. The IMF now estimates Israel's real growth rate at 6.5% for the 2026 year, and India has slipped to 6th place in nominal GDP rankings because of the fall in Indian rupees. So, the opposition asked, which story is true? The resurgent India of the government press releases, or the India whose Prime Minister must appeal to citizens not to buy gold for their children's weddings? On social media, reactions range from sarcastic to genuine alarm. Several users drew the parallel to 1991, which was obviously unfair, the last time India faced a genuine foreign exchange crisis and was forced to pledge its gold reserves to the Bank of England to avoid a sovereign default. The comparison may be statistically premature. and laughable, and we will address the numbers shortly. But the fact that millions of Indians instinctively reach for that reference tells you something profound about the anxiety in the air. Others question why government ministers, officials, and the political class were not making equivalent public pledges to reduce their own foreign travel and imported consumption. And some made a more pointed observation that the very stock market crash triggered by the Prime Minister's appeal had itself destroyed more wealth in one morning than any amount of individual gold restraint could have saved in that year. That is not a trivial point. When a Prime Minister's world caused 5 lakh crore rupees to evaporate from the investor portfolios in few hours, the economic signal sent is larger than the fiscal saving intended. However, the government's position is structured and in part persuasive. Its argument is this: India's current foreign exchange stress is not primarily the product of domestic policy failure. It is the consequences of a geopolitical rupture that no government of any ideology could have fully insulated India against. The US-Iran conflict and the resulting instability along the Strait of Hormuz have created an energy shock of a scale and speed that has rattled every import-dependent economy in the world. India's foreign exchange reserves stood at approximately $728 billion before the conflict escalated. They now stand at approximately $698 billion, a drawdown of $30 billion in a matter of weeks. The government points out that the $698 billion represents roughly 11 months of import cover, a position of a structural strength, not 1991 level vulnerability. So the government's framing is, in a sense, this: we have built a strong fortress, the walls are holding, but an external storm of unusual intensity has arrived, and we are asking citizens to supplement the defenses not because the fortress is falling, but because the storm is unpredictable and the cost of inaction is real. In 1962-1965, Indian citizens voluntarily contributed to National Defence Fund at the government request. This appeal, the government argues, is the economic equivalent of the wartime national solidarity. The precedent carries historical resonance, and it is not dishonest. And now, the bottom line: the Prime Minister's appeal is neither reckless nor dishonest. The data on gold imports, petrol independence, outbound travel expenditure, and the immediate fiscal pressure of the US-Iran conflict, it all adds up to a coherent case for civilian restraint. And I have no doubt that millions of ordinary Indians, when presented with these numbers, will respond with exactly the instinct of patriotism that has never failed this country in a genuine crisis. But there is a harder verdict as well, and it sits in the market data from this morning. When a Prime Minister appeal causes 5 to 6 lakh crore rupees of investor wealth to evaporate in a single session, when gold stocks fall 12% and aviation stocks weaken on the word of the Prime Minister, the market is not simply reacting to the spiel. The market is pricing in a deeper question. Is this government telling us everything? Is this a temporary storm or the public acknowledgement of a structural problem that has been building for years? India has been the world's fastest growing major economy for 5 consecutive years. In that period, domestic and gold mining has remained effectively dormant, 1.6 tons against 800 tons of consumption. In that period, the transition to renewable energy, the only permanent cure for petroleum import dependence, has progressed, but not at the speed that the scale of the problem demands. In that period, domestic tourism infrastructure has improved, but not enough to make a holiday in Lakshadweep or Uttarakhand as aspirationally compelling as Dubai or Phuket or any place in Europe. Leadership, not only the ability to ask citizens for sacrifice in a crisis. The greater test of leadership is ability to build the structures that make those sacrifices unnecessary. The appeal to the citizen is justified. The accountability of the institution cannot be deferred. Citizens can restrain themselves for 1 year, but they cannot be asked indefinitely to compensate for a structural dependency or failure that has persisted for decades. And that policy, not patriotism, must ultimately resolve. A nation that cannot mine its own gold, cannot extract its own oil, and cannot build resort that its citizens prefer over foreign destination, must at some point confront this question: when does restraint become a substitute for reform? The market asked that question this morning in 5 lakh crore rupees. That is the bottom line. Watch this video, subscribe it, share it, write your comment, good or bad, sweet or sour. I will read them but will not get angry. Jai Hind.